A very good afternoon and welcome to CNBC-TV18's Mumbai newsroom. I'm Ekta Batra and with me is Pavitra Parekh. Well, you're watching your stocks. It's turning out to be a session where we're just about consolidating as we have been for many sessions now, Pavitra. But, you know, it seems as though there's a lot of action underlying, beneath the surface when it comes to the markets. There are multiple stocks which are at fresh 52-week highs. There are a lot of stocks which are reacting handsomely to earnings as well, the likes of Asian Paints as well as Eicher Motors. So stock specific seems to be where the action is.
Oh, absolutely. And for the entire week, it has been like that, right? Where, like you pointed out, we've been consolidating. This is also the sort of area where we have seen some amount of resistance. For now, we're above the 18,340 zone. So definitely at the high point of the day, there has been a good recovery, over 100 points from the day's low. So do keep that in mind. The mid-cap index, small-cap index are underperforming today. So a little bit of pressure seen in the broader markets, but the advanced decline is absolutely flat. 1:1 over there. But, you know, we've got a lot of queries which have come in. So let's invite our guests on the show as well. We have Ruchit Jain joining us. He's lead research at 5paisa.com, as well as Astha Jain, research analyst at Hem Securities. Ruchit, Astha, thanks a lot for joining us as always and taking out the time. The first query comes in from Jyoti Prakash, who writes to us from New Delhi. She holds 20 shares of Asian Paints. What a good day for us to discuss Asian Paints. She's bought it at 2,500. And considering the strong Q4 FY23 numbers from the company, she's asking if she can buy more of these shares. So she bought it 2,500. Asian Paints is currently around 3,140. So she's already seen good, money made on this one. Asa, let me come to you first. Do you think, in spite of the fact that, this is significantly higher than where she got in, it's still a good, good level to get in and buy some more?
Hi, good afternoon to both of you. Talking about Asian Paints, yes, the results were very good. And what we are believing the stock to show some sort of upward momentum from here. But I think buying on dips is a better strategy at the present moment of the time. So I will suggest to buy on dips because I think going forward also we are expecting this rural demand and the capex infra which is by the government, I think that is also will be the demand driver for the company, and the company will definitely get getting good demands. So I think all in all, I think going ahead, we are expecting this company to post higher EBITDA margins, and on that way, maybe the results going ahead will also be very strong because the company is also on the line of new product launches. So all in all, it is a really good long-term story. But at present moment of a time, since we have seen a sharp rise in the stock prices, so buying on dip strategy is advisable. And target is somewhere around at the initial level can be kept at around 3,350 to 3,400.
Okay, all right. So that's the view coming in. 3,350 to 3,400 is basically the near-term target for Asian Paints. Ruchit, welcome to this conversation. Asian Paints is just about 10% away from its 52-week high. What would you recommend in terms of buying more shares at current levels?
Hi, very good afternoon, Ekta. Very good afternoon, Pavitra. Well, I think the kind of volumes that we have seen post results yesterday, and the results were also above estimate, and the good volumes indicates a buying interest in the stock. And last few months we have already seen a corrective phase passing by. So the downside seems to be very limited from here on. If one can keep a time horizon of next 4 to 6 months, then I think the stock should head higher towards its previous highs, which were around 3,500, 3,550. So for now, the trend still remains positive. At current levels or any dip towards 3,000 should be used as a good buying opportunity for the stock. And next 4 to 6 months time frame one should keep for holding for potential targets over 3,500.
Okay, all right. So that's a positive view coming in on Asian Paints across the board. 3,300 plus in terms of a target price, up to around 3,500 is what the guests have indicated. Well, let's move on then. Isha Khatri writes to us from Gujarat. She holds 100 shares of Lloyd's Metals and Energy, which is bought around 278 rupees, and 50 shares of Coal India, which is bought at around 245. Wants to know whether to hold or sell at current levels. Well, Astha, both of these are commodity plays. What would you recommend on both these stocks at this point, Lloyd's Metal and Energy as well as Coal India?
So talking about Lloyd Metals and Energy, I think this stock is really very good for the long term. So I recommend hold on this stock because I think we can see the levels of 350 to 360 in this stock. Why I'm positive on this stock because it is into the mining and the major part of the revenue, that is 76%, is coming from the mining. And I mean they've got excellent ranking or rating for their mines also. Apart from that, they are into the DRIs also. So I think, I mean, the kind of business which company is into, and in fact, it is the first full year of their, mining operations, and they have shown very strong number. So I think going ahead, company will be really able to put strong numbers again. So I think this is a very good counter one should remain invested in with a price target of 350 to 360 at the initial level. Talking about Coal India has posted mixed set of numbers because what we have seen is that the volume on the e-auction front was not very strong. And why that was the case? Because now what we are seeing is the supply of the cheaper imported coal. So that is again, I mean, giving some sort of competition to Coal India, and that is why we have seen some sort of mixed set of numbers. But in the long term, I think it will again gain the momentum. So just for the long term, Coal India is looking good, and price target can be set at around 255 to 260.
All right, got that. Ruchit, let me come to you on both of these as well. Coal India and Lloyd's Metal. Lloyd's has actually had quite a run already, right? It's up around 11% for just in 1 month. Do you think the up move is going to continue?
Yes, in fact, if you look at last 8 or 9 months, the stock was hovering somewhere around 140, 150 during last year in the month of September. From that, it has almost more than doubled, in fact. So still the trend remains positive. But I think at least partial profit booking should be done over here, considering that the momentum readings on the medium-term charts have now gone into overbought zone, and the stock has already seen a rally. So I would suggest to book partial profits over here in the stock, and on the rest keep a stop loss below 270, which is a very good support on any declines now. Coal India, my advice would be to continue to hold on. We could see some time-wise correction in the stock, and that's what we have seen in last 6 months to 1 year. That whenever the stock rallies, after some time the stock goes through a time-wise correction, it remains sideways for a few weeks or months, and then again it resumes its uptrend. So that pattern is getting continued. We have not seen any kind of higher volumes on the recent minor corrections as well. So my take would be to hold on Coal India from a medium-term perspective, and the higher levels 260 could be expected in next few months.
All right, got that. That is the view on Coal India as well as Lloyd Metals. But with that, the other query coming in is from Ramesh Khurana, who writes in from Mumbai. He holds 200 shares of GMR Airports bought at 30. He wants to know the future prospects after the merger of GMR Airports with GMR Airports Infrastructure. Coming to you, Asa, do you think this is a good stock to hold, and would you advise, staying in this space?
So though we don't cover this stock in a detail, but I think the kind of merger which has happened, that can be really positive for this company. But in detail, because we don't cover the stock, so I cannot comment. So I really apologize for that.
Okay, all right. Ruchit, would you have a view?
Yes, the technical structure looks quite positive because we have seen a high top, high bottom structure. The recent up moves have also witnessed very good volumes along with the price up move. And if we take some reciprocal retracements of the previous corrections, then it is indicating near-term targets of around 49 to 50 and some long-term targets around 58 rupees. So ideally, if we can hold on for next few months or maybe about a year's time, then 57, 58 at least should be expected on this stock.
Okay, 57, 58. It's already given good returns in the past 1 year odds. So that's the view coming in technically on GMR Airports. Let's move on then. Amit writes to us from Gurgaon. He holds 2,700 shares of Indian Energy Exchange, which he's bought at 181 rupees per share. So he's currently sitting at a loss. He's a medium-term investor and wants to know what to do, whether he should hold on, sell, or sell at current levels. So the 52-week high for that particular stock stood at close to around 200 rupees. So there's been a significant come-off which has come in on IEX. But what would you recommend, Astha? Do you have a view on this one?
Yes, sure. So for IEX, I think he can hold the stock. Price target can be set at around rupees 190, 195 level, because the kind of volume growth this company has witnessed in the April month, it was really significant because they have shown 6% sort of volume growth. So I think that is really looking good to me. In fact, now I mean they have the 100% market share also. So I mean with such sort of market leadership in the market, and they have the monopoly, and now the volumes have also started rising. So I think that is really looking good to me for this company, and that's why I have a positive view on the stock. So my stance is just hold the stock. Maybe the cost price can come and we can see some sort of upside also. So at the initial level, I'm giving the price target of 190.
Okay, Ruchit, are you bullish on the technicals as Astha is on the fundamentals?
Yes, in fact, I have some similar view technically as well, because I think the price-wise corrective phase is over for the stock. We have seen a very sharp correction post that ex-bonus activity which we witnessed in the month of December 2021. And now the prices have started showing a gradual up move, which has also been supported by good volumes. And usually whenever we see volumes happening, from the lower levels along with price up move, those stocks, tend to show a slow and gradual up move. So 194 is the technical target which has been seen in terms of retracement. So quite close to what Astha mentioned, around 190. So my take would be to hold on to the stock. When it comes around 190, 195 range, ideally that would be a good time to take a review again.
All right, got that. So that is the call coming in on IEX. With that, we are going to get into a short break. Ruchit, Astha, I request you to please stay on because we have lots more queries which we're going to take up after this short break. Hey guys, welcome back. You're still tuned into Your Stocks, and we still have with us Ruchit and Astha to answer all of your stock related queries. The next one has come in from Shyamala, who writes to us from Hyderabad. She holds 12 shares of Emphasis at 31.40 and 20 shares of Ami Organics at 13.64. She's a medium-term investor and wants to know whether she should hold or sell the stock. So one on a mid-cap IT company, and that is the one that I want to start with.
Okay, so maybe I think maybe there's something wrong with Pavitra's audio. We'll get that fixed in just a second. But Ruchit, if you could just come in with regards to these two, stock queries: 12 shares of Emphasis at 3140 and 20 shares of Ami Organics at 1364. Do you have a view on them technically?
I think Emphasis, that the technical sector is not much positive. We are not expecting any significant outperformance from this stock because even when the overall IT space had seen a pullback move a couple of months ago, at that time too, this stock had not seen any kind of major participation. I think within the mid-cap IT space, we have positive view on other names such as FSL, which has shown a good breakout of late. So my take would be to take an exit. My view advice would be to take an exit from Emphasis and rather shift to FSL, where better returns could be there and the losses may be recovered much sooner compared to what she can expect in Emphasis. And ME Organics would advise to hold on. Of late, we have seen a good price up move and a formation of a bullish pattern is there on the charts, and which indicates a target somewhere around 1150 to 1180. So hold on for those targets. When it comes around those levels, it can take a review again.
Okay. Astha, fundamentally?
See, talking about emphasis, because the results were not up to the mark, we have seen the markets punishing the stock. And I mean, they have not shown strong set of numbers because the mortgage business was not working well. And even the management has guided that maybe the Q1 of FY24 will not be great for that company. So I think going ahead, at least for coming 3 to 6 months, the outlook is not positive. And that's why even I recommend, in case if the horizon is not long term, that is of more than a year, then a partial exit can be recommended from the stock, and partial hold is recommended because the management has also guided that Q2 FY24 will again be the strong quarter. So here the investor has to decide the time horizon. If the time horizon is more than 6 months, then remain invested, and if it is not, then partial exit is recommended. And in fact, I'm recommending Scient to buy in case if he or she partially exits from the stock. Talking about ME Organics, the IPO has came recently, and we all know that has performed well. And in fact, the results will be tomorrow. The company will be declaring their results tomorrow, so I will be really keeping my eye on the results. Meanwhile, whatever they have posted in their past quarter numbers, that was a decent set of numbers. This company is basically into the R&D, and they are into the manufacturing of APIs, and they are one of the prominent, API manufacturers for the pharma companies. So I think this company is looking decent on the initial level. So we really need to see the results. So I recommend hold on the stock because the results will be out tomorrow. So then again, the position can be reviewed. Meanwhile, if the results will be up to the mark, then we are recommending that the stock can be hold for the price target of 1200 at the initial level. Although the cost price is higher than that, but I think if the results will be in line, then definitely one can see the cost price also in coming 2 to 3 months.
Okay, that is the call on AMI Organics. Let's move on to our next query as well. This comes in from Rajiv. He says he has 70 shares of Andhra Paper, which he bought at 305, and he also has 20 shares of Angel One, bought at 1200. So on both of these, he is seeing some amount of a profit. Astha, do you think with a long-term view, there is lots more to go in both of these names?
Especially for Angel One, we are really positive because the results were very good, and they have seen the strong inflow in their of SIPs also due to the launch of their super app. And in fact, the company has got the approval for their launching their own mutual fund. They have shown some sort of market share increase also, and we have seen the volume increase also, especially in the derivative segment. So Angel One is really looking good to me, and I recommend hold on the stock for the price target of 1550 to 1600. So I would recommend it to hold rather than taking profits out, although the profits are looking quite handsome at this point of time, but this is a good long-term story. So this stock is a hold from my side. What was the second stock? Sorry, I missed that.
Andhra Paper also.
Okay, so talking about Andhra Paper, even they are among one of the strong manufacturers of the paper and pulp in India, and they have posted very strong set of numbers. In fact, when I was going through their balance sheet, even the debt was minimal debt. And the most important point is about the valuation, because they are quoting at a P multiple of around 3.5, where the industry is running at around 6 PE multiple. So even they are running lower than the industry average. So I think the valuations is in the comfort zone. They have posted very strong set of numbers in the quarter four. I think more than 100% jump they have shown in their bottom line in the Q4 of FY23. So strong set of numbers with a decent valuation and a very low debt on the book. I think this is also a good long-term story. So one can stay invested in the stock also.
Okay, well, just talking about a couple of stocks, Cipla is just about managing to hold with a gain of around 0.7%. We're still waiting for the Q4 performance to come through. Remember that they've already done quite well this week. It's up around 2.7% on a week-to-date basis. So they're going in quite strong into its numbers, 950 rupees for that particular counter. Margins are expected to come in at over 20-odd%. It will be supported by a low base. The US business is expected to be anywhere between 185 to over $200 million. So there's a wide range in terms of what they could do for the US business. Commentary is going to be extremely important when it comes to key drugs such as Advair generic as well as a Brixon generic, which is a cancer drug, and Advair is an inhaler drug. So do watch out for Cipla. But we have Chavi, who writes to us from Bhopal now. She holds 60 shares of Gujarat Heavy Chemicals, which she's bought at 533. She's a medium-term investor, wants to know what to do, whether or not she should exit the stock, what should her stop loss be. What is your recommendation on this one, Ruchit?
So it's more into a consolidation phase since last few weeks. We have seen that the stock has been taking support around 485, and the resistance is exactly around the cost price, which is around 530, 535. So hold with a stop loss below 485, which is the support. And in case the stock sees a pullback towards that 530 range, I think take a review again whether it should be exited over there or not.
Okay, got that. That is the call on the GHCL. And with that, Ruchit, Astha, thank you very much for joining us and taking out the time, as always, to take us through all of these queries. We're going to wind down on this edition of Your Stocks. But remember, we have closing bell, which comes up to take you through the final hour of trade.